Home buyers frequently ask questions. Number one, how much money do I really need to buy my first home? You typically need a 3.5% for an FHA loan and 5% for conventional. And for closing costs, you need 2.5 to 4 or 5% for closing costs. And 2 to 6 months mortgage payments save as an emergency fund. Many first-time home buyers successfully purchase homes with as little as $10,000 to $15,000 upfront cost. It also depends on the price. We are in Los Angeles County, and 3% of 500 is $15,000. So it's really a little bit more in LA County or in California. If it's 600,000, will be over $20,000, so on and so forth. It's just an idea for it. Number two question is, what credit score do I need to qualify for a mortgage? For conventional loans, the minimum is about 620, and for FHA, they can do loans starting at 580. 580 is the bottom, but it will add more costs and the interest rates will be higher, because 580 is when people have border low credit scores. The higher the credit score is better, because you get a better interest rate as well. There is loans for FHA with 500 FICO, but they require at least 10% down. And the best advice is improve your credit FICO scores. And how do you do it? Paying on time. Pay the minimum payments that the credit card requests on time every month, and that keeps you FICO scores growing. And don't spend more than 25 to 35% of the credit. Let's say if you have a credit of $1,000, don't spend more than $350 a month. But if you pay it monthly, the full amount, that's okay, even if you spend more than that. But if you don't pay on time and pay the minimum, then your credit will get better over the time. Number three question, should I wait for housing prices to come down before buying? Timing the market is really impossible. It's nearly impossible. Instead, focus on your current financial readiness and the long-term plans. If you're financially prepared and plan to stay 5 or more years, and the current market matters less than your individual circumstances. The rents are increasing 3% to 4% a year. So the longer you wait, the more you're going to be paying, and the lesser equity you're going to get over the time. Because if you wait 3 or 4 or 5 years, in 5 years you get very good equity. But if paying rent, you're going to be paying in 5 years 15% more of the rent on what you're actually paying right now. So buy when you feel that you're ready. Sometimes people don't buy and they have great credit and they have the down payment because it's not their time for them. Some people don't have enough money for down payment and closing costs, and they are willing to buy. And when they are willing to buy, we find ways to get you a home, because there is down payment assistance programs, and some lenders have down payment assistance, some give them money for closing costs. So buy when you feel ready. Don't wait, because rents are going to be higher. Question number 4. How do I know if a neighborhood is a good investment? Research school ratings, crime statistics, planned developments, and employment opportunities in the area that you're planning to live. With all that research, you may feel comfortable over the time. Also, check the area where you're planning to live in the day and night as well, on the weekdays and weekend as well. Because if there is people that make parties over the weekends every weekend, and you're driving one Friday or Saturday and you see it and you see it again 2 or 3 times, take in account that if you don't want the noise, you should avoid that particular area. Maybe you move 2 or 3 streets upward or downward, or east or west or north or south. But check the areas. Ask the neighbors. Never ask only 3 neighbors. Ask 5 to 10 neighbors, because there are some people who have been living a long time, people living 2 or 3 years. Some people have not a good opinion of the area. So in order to have a wide variety of opinions beneficial to you, ask 10 people. In that way, you may get 5 or 6 better and 3 not good, because they are opinions anyway. And number 5 question, what's the biggest mistake first-time home buyers make? Skipping the pre-approval process and house hunting without knowing their true budget. Get pre-approved first to understand the exact amount you can afford, and show the sellers you are seriously buying, and sometimes the markets are very competitive. So the better the credit and the better the approval, because if you are just pre-qualified, pre-qualification is when you mention to the lender how much you make, how much the monthly payments you do on your credit cards and the car, and they don't see any taxes. So they give you an estimate and they don't know exactly what's going on in your credit. So don't do that. Get pre-approved, because sometimes there's multiple offers and you won't be competed, and you don't want to get denied for the loan for just being pre-qualified when you're already in escrow. So prevent that and take the action correctly. And my name is Alberto with Homesmart Evergreen Realty, and you can reach me at 818-481-9211, and please subscribe to my channel. I upload videos at least 2 or 3 times a week, shorts and long videos as well. I wish you the best. And I'm here in the San Fernando Valley, but I cover all the San Fernando Valley, LA County areas, all the way to Palmdale and Lancaster as well.